Uh-oh. 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 That's what I gotta say. Uh-oh. You may see that bearish engulfing candle yesterday on S&P. Dun 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 dun. Bearish engulfing. It went higher and lower. Dun dun dun. Bearish engulfing. Not too good for the long team. I would be very, 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 very careful at this point. Very careful. And welcome everybody. AT Goose, Lieutenant Colonel Goose, welcome. Eric, Maurizio, Robert, George, Carlene, Gary, Rob, Leah, Donald, welcome. Wade, Imuku, Chris, good to see you. Brian, Rob, Alan, Amy, Paul, don't recognize your name, but welcome to the stream. Rick, Ted, Major John, good to see you, sir. Rex, Sandacor, don't recognize your name, but welcome to the stream. Gayton, Andreas, Philip, and I just skipped the chat. Of course, Jan, John, Darren, Joseph, Laura, Helen, Captain Sledge. Now I can call you Captain Sledge. Ryan, JB, Tara, General Rush, good to see you, sir. Thomas, Craig, Jason, Mark, Diana, welcome everybody. Merle, Jason, I don't know your rank either. Anyway, glad to see everybody. Glad to see everybody. And this is the biggest cautionary tale of the day right here. We had a bearish engulfing. If we get continuation lower, oh man, watch out below. Watch out below. So that's the big deal. Now, popping over, looking at the PPI. Just make sure I got that loaded up. Came in hot. Not too good. Usually this precedes a pop in CPI because producer prices going up usually precedes consumer prices going up by about 3 months or so. Takes that trickle down economic stuff we used to talk about, right? Anyway, watch out, watch out, watch out. The core popping like that, not too good. Not too good. I mean, we've been seeing some chaos though. I mean, it's been like volatile is what I would say. So it's not up here at 1, but that's prices going up. It's not prices going down. In line with history, but it's a little bit on the high side. Definitely a little bit on the high side. So producer prices going up. And it surprised the upside, which is not good for going higher. We do get consumer sentiment coming up here at 10 o'clock. Right there. Get some consumer sentiment expectations, inflation expectations, and the month over month. They don't give me a year over year on PPI for whatever reason. I don't know. I don't know why. But the regular, I guess, without the core came in basically in line. So some prices going down, but the core price is going up. Also cautionary right there. Remember, the Fed cutting rates is not bullish. So I don't care what anybody tells you. I don't care what the mainstream media perpetuates. If it can be good for restarting the economy. It's one of their tools that they as interest rates drop, it's cheaper to buy stuff. But that takes 2 years to trickle through the economy before it gets fully baked in. So these rate raises, I mean, the last raise, let's just go talk about it briefly. DGS2 here, Delta Golf Sierra 2, 2-year constant maturity rate right there, overlaid with the Fed funds rate. If these take 2 full years to bake in, we're talking about the last rate raise right there being, let's see, be 104 bars, 104 weekly bars. So we're talking about right there before we fully baked in to that last rate raise right there. And we're just halfway through digesting all the rate raises. And you can already see the chaos. What happens when we fully bake in all the rate raises into the economy? Problem time, baby. So even if they cut rates now, it won't, like, we're looking at further out there, another 2 years. Even if they cut them at the end of the month here, we're looking at that not even being fully baked into the economy until out here in June of 26, or July of 26, really. So that's a long time. This is like making speedboat moves with a freaking mile long train. So, or an oil tanker. You're trying to make fast. You're cranking the rudder and then waiting for the oil tanker to move on the ocean. I mean, it's everybody's like, oh, it's gonna be good. Yeah, good over here. Not good over here. 2 years, 2 full years, 24 months it takes for a rate raise to trickle through the economy. So, just saying. And, I thought when we crossed over, we would see some problems. Now, I kind of speculated we would go up here possibly before we went down, but we can go down from here. That's why there's a giant question mark that's been there for a long time. Every time we cross in the past, it leads to a freak out in the market. At least my whole trading career, every time we've crossed over, every time the Fed's outdone the market rate, you can say, well, I thought the Fed set the market rate. No, the market rate is the market rate, and the Fed chases the market rate. And if you thought it was the other way around because of mainstream media, welcome to reality. The Fed is always chasing the market rate. And right now, the market rate is below the Fed's rate. And they're stubbornly holding higher just in case. I think if they cut, it may take off again. That'd be the scary part. So be careful out there. We got a bearish engulfing on S&P yesterday, and all trading involves a substantial risk of loss. Past performance not necessarily indicative of future results. This presentation is intended to be informational, educational, fun, and entertaining, not a recommendation to be buying or selling anything. No stuff from gurus, no stocks, no options, no bonds, no forex, no futures, no cryptos, no treasuries. Don't long them, don't short them, don't trade them. Think about it. Every trade, buyer, seller, winner, loser. Let's try to get you on the right side. But if you desire personal financial advice, that's not what I'm doing. I'm not trying to advise you for anything except to take care of your own money. All right. Nobody's watching out for your money more than you are. But if you need some help, you got to hire and consult a financial advisor, which is not what I do. But, and you should please make sure you trust them. So this is the big, I think everybody sees this, hopefully. That low. Just draw it over here a little bit just for the sake of demonstration. This high right there. And you can see we engulfed one whole candle right there. That's called a bearish engulfing candle. We engulfed that whole thing in there. Almost got 2. And usually if we get 3 in one candle, like if this had closed right down here, if that had gone down there, ooh, baby, that would have been really ominous. We only got one fully. So we almost got 2. If you got 3, that's a very strong reversal in the market. Now, the question is, do we get continuation today? We're kind of coming into the market a little bit flat. We continued down a little bit, and we're getting some reprieve overnight. That, though, we're below the 15-minute roadmap line. Look at that on the PPI. Flushed down, came right back. Not too shabby. Not too shabby. Check out, even in 1 minute, that was a one, like that. It did that whole flush on 1 minute. Knee jerk and close here, and we're back on top. So on the small time frame, the 1 minute chart, back on top. We've got about 4 minutes till the open. So be careful. 5 minute, just kind of flat. I mean, really flat. Look at that. Stuck in a very tight range right there. That's what? 10 points? 12? 17 points. It just kind of humming along. And then it got down to that range at 1 o'clock yesterday. And we just kind of hummed along. Futures reopened right there. It closed at 5, reopened at 6 Eastern time. And took a little divergence out and shot right back up in. That can lead us to a new high. We could grind a little higher. Definitely could. So the warning spots, is anything changed, HE? Do we need to know anything different? Not really. Not really. We'll go through the bias of the day at the end, so stick around if you want to know the levels to watch out for. But bearish engulfing, so this is time for caution. You know, it just ratcheted it up. Another warning light, another cautionary indication from the market. And look at that. Look at that. That was a strong 2-day right there. Still below the trend though. So we saw a nice strong move there. S5TH stocks above the 200-day. You know, this what was this? This was stocks above the 50-day right here. S&P 500 stocks above the 50-day. Jumping over to the 200-day. Why do I have them in this order? Because I do. 200-day rejected, breaking down once again with a nice 2-day bounce, but we're still below just where we were like 2 weeks ago. Still below that. So we're still seeing less participation in the market as we go forward. The highest participation was back here on April 1st, and we've been getting less and less participation as we grind higher and higher on the S&P, because look where we were April 1st over here. We've ground higher, definitely higher, but we have lower participation. Now, maybe like, well, what's the precedence for this? Look, back here in 2021, coming into 22, we set the high back here in April, and we rolled off in a big way right after the new year in January 22, and we went all the way down to the bottom in October, September, October, right there. Now, we made the bottom basically in September and took off in October, and we didn't break above the 80%. These are percentage of S&P 500 stocks. You know, 20% we're above their 200-day down here at the bottom, and 80% usually we stay in the range. All right, we don't usually take a divergence out of the range very often. Very occasionally when we make bottoms and tops in the market. That's why those two lines are drawn on there. Same with the S5FI. We tend to hang out in the middle most of the time. We don't tend to make big divergences, but we do tend to oscillate between the top and the bottom and the top and the bottom, and we haven't gone to the bottom yet. Could we poke out the top one more time? Entirely possible. There goes the market. Sell, 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 sell. That's a bunch of closed trades. That was a 1 minute. Sell. Sell V, sell, sell. Getting a lot of sells. And then looking at the 20-day moving average, even faster. We came up back to that downtrend line. If we hold here and turn down again, be very, very careful. Very, very careful. All right, what this is saying is that the market has concentrated in a very few number of stocks as we've gone higher, because it's gone pretty much, you know, while the market did pretty much this going higher, we're seeing this continue lower. So the number of stocks participating in that rally right there keeps getting smaller and smaller. Oh, look at that. That's a day trade right there. 1 minute. Yes. And we'll see if that can rally up back out of here. In Q. Oh, we're seeing some red here. Let's jump down. Look at the 5 minutes. Look at that. Rejecting, breaking through the 5 minutes. Watch out. This can't, if this low breaks right here today, probably not coming back for a little while. If we get continuation lower today, we're probably going to flush it on down. Now, interesting, the Russell here got a very strong move up. And look at that. We're poking to new highs today. So watch out for that to hit that 2200 area, possibly even 2230. That was a crazy move on Russell. Absolute crazy move. This is not an index that moves like this. So that thing popping up. We could get, now a lot of regional banks are in this and a lot of other small cap stuff. So if we start getting some bad news, this may roll very quickly. This is not the indication that everything's okay. This is, I drew this target up here. We held. We actually set a, all the way back over here. We kicked off an Apollo-based trade on the daily chart. And the target was up here at 2230. 2210, 2230. Came down, still rolling. If you want to, I'll have to change the setting down to one contract for the futures. There it goes. You can see the entry was right there. That was the entry. Still rolling. Probably going to hit the target right up there. I mean, this thing works, and it's 87% of the time we would. It usually lasts 27 bars on average, so this one's probably going to be lasting a bit longer than the average. There's XLP hitting the target. If we go from here over to here, you can see we're running 45 bars currently. Getting close to the target. Now, could it miss the target and go to failure? Yeah, absolutely. Could it be one of the longest ones ever? Yeah, absolutely. That's why you got to be careful with averages, because 50% of stuff is above average, 50% of stuff is below average. CL, nice reversal. I kind of expected us to hit there. If we break above this high right here, if we break out above that high, you could set an alarm there at 84.50. We break above that, we're probably going to make a $6 move right up here to the 90, 89.90, you know, $5, $6 move right up in there. Probably going to do it. Gold, nice pop yesterday, giving a little back. Probably going to back test that little high right there where we kind of broke out from. Back test it just a little bit. We can hold. Probably be cruising right up into the 25, 25.30, 25.50 area on gold. Oops. Silver took it all back though. Yeah, I was looking for silver to really keep. I really want to see silver keep going. 35 have been my target for a long time on silver. Bitcoin still consolidating on the roadmap line. Can't get off the mat. I suspect we're waiting on the spot ETFs for Ethereum. They might get approved today. Be careful. That can lead to an outsized surprise pop. Could go absolutely nuts. Could go up here. It's worth, we've set the stage for 4480, possibly 45, or possibly 5,000. And if we break out, we could get the extension, 6,000, possibly even 7,000. Be pretty wild. So watch for those spot ETFs. Any day now, we're going to get those. They're probably going to get approved. They're all but approved. And they had some fiduciary issues where they wanted to make sure that that there were no side deals cut for acquiring their Ethereum and whatever, blah, 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 blah. And dollar continues its push below the roadmap line. So the last line of the sand here, right there. If we get below that, probably going lower. Probably going lower. And the next line of resistance would be right down in here. If we break below that, odds are we're coming on down to the mid 90s down here. Now, what's popping and dropping today? ASML getting slammed back down. It's making the popper list because slammed off of that 1272 target. Hold the breakout. We can rally on up to 1180. So this is very classic pattern here where we go up to that. We retrace back to the breakout. And then we hold there and go higher for that extension. But that only happens like 35, 40% of the time. So it's very common, but it's still not high probability. So we may see this, but if we don't hold here, it can come all the way back down here. So are we going to pop or are we going to drop? Question mark. I don't know. High probability thing was if we had touched that, we would bounce up to here. We didn't touch it, but we still bounced up to here. I didn't trade it. I like the best of the best setups. I've only got so much money. Fastenal. This one could be, wow, that could be a blow off top right there. Be careful. Now, the interesting thing here is this could, well, it probably needs to retrace just a little deeper to go higher from here, but that was a pretty strong finality move right there. Retracing, that will probably do a 3-wave retrace. That's only a 1-wave. We may come rallying back up, find resistance here, and do a 3rd move down, similar to this move. Right here, somewhere down here. Find a bottom in the vicinity of wave 4, and then go up again on Fastenal. And that can buck the market trend even. LABU, it's cruising off here. How high can we go? This is leveraged. Be careful. Resistance right there. If we break through, yeah, it could be positive. Yeah, I don't really care about QQQ. NQ is the one I watch. NQ did engulf a bunch. So that's cautionary on big tech. Got 1, got 2, got 3. Not quite the 4th yesterday. But that one did engulf 3. Watch out on big tech. I tell you, it's scary. IWM. Probably cruising on up to the target. Let's just redraw the target. Right there, 215 to 217 is the target area. Right there. Nail. Boy, that's got some work to do. That's got some work to do. Let's just remove the drawings. And that high, that low. Resistance at that prior high. Funny enough. That 618 wasn't even where it is now when it did that, but that's the resistance to clear. If we're going to go to 163, this is a 3x leverage on home builders and supplies. Be careful. DHI coming back up strong. Can we get above this resistance? And it stopped out on that one down there. If we get above it, odds are we're going up here, 174-ish. Lennar, same situation. I think these are all rallying on the potential that we get lower interest rates, but living on a dream, living on a however the song goes. Anyway, yep, there's a day trade on Netflix. Lennar, we break above that, 176. TIL, that's a biotech. Cautionary, piece of garbage. Reverse split, dumpster fire, all the stuff that takes for this to keep going down in a flaming pile of crap. Be careful. Get the dumpster on there. It's a flaming dumpster. Be careful. FSLR. Oh, look at that rejection right off the target, coming back down. Probably going to hit the roadmap line. Probably. I would expect it to come right down in here somewhere. And it could go even lower. Zap. Man, that's another potential dumpster fire there. You'd be like, well, it's going to rally. Be careful. We already collapsed it 20 for 1. Tech. Just redraw. So the last time it did the bounce, hit the target. That. At the resistance, possibly could go up to 57 right now. I mean, it could keep going, but didn't do another full bounce on the daily chart. Probably did on the 4-hour chart. Did smaller time frame bounce. Potential if we can close above that 618 area right there at 5150. Sets it up for 5650. I'd be careful. Be careful. And it's only 63% historically. Wow, lots of day trades. Must be some volatility in NASDAQ. URTY. There you go. There's an Ultra Pro Russell. Leverage Russell. And notice, IWM is at new highs, but this one not. So there is some decay happening in there and dividends. IWN, another Russell product. Value product. Looking for the value in Russell. And set to go up to 161 there. NVO. Probably going to come on down. Baba. Nice break above. We got this resistance up here. We got to clear to go higher significantly. This one can be set to go to 180. Not overly bearish on China, despite the horrible news that we've had. Seems like for a year. This can be a very bullish pattern here if we can break on out. Got to get above this level right here where we did this double gap down thing. Gap down, gap down. Got to get above that resistance. So basically, we got to get above 87.40 to set this thing up, and 93, and then we may do some retraces, but probably setting the stage to rally on up here back to this area way up here, 180, 190, 200. Citibank, Citigroup, rejecting out of that resistance there. There's going to be bag holders sitting there that are ready to sell, and that's what we may see here. So we can absorb all that selling and then push on through. It's going to be a little bit yet. If we can get that close above that resistance there, price sets the stage to going up to 91 on Citigroup. Baidu. Come up to the roadmap line. Really want to see that get back above this consolidation from back here in May. If we can possibly do that. It looked really good back here. Then it failed lower. Looking like it was going to break out here in May, and then we went lower, made a lower low. If we can get above that in that junk for May, back test it a little bit after coming up here, back test, and then potentially get the bigger go. We could be looking at a large upside move, possibly up to 300 on Baidu. But that's going to be a while. Not going to happen in a day or 3. Stuff that was declining, Meta, gap down, probably coming back for the roadmap line after basically hitting the target area. Didn't tag that 547.70 right on the money. So we may hold here at the 618 and go for it again. Could happen. FNGU. Whew. Well, I thought that was going to give up at some point. Looks like we gave some back. Tesla had a large, like 40-point candle yesterday, dipping and starting to rip today. Taking it back higher. Excitement. IBM. I'm just curious. Oh, Target. Target. Snow. Gap down. Lame. Want to see. So small time frame that can bounce again, but bigger time frame. Daily chart. We need that lower low. Weekly chart, really. We need that lower low to flush out this. This was a big corrective move. We broke down below the lows. We need that move down in here to flush this out so we can build the base and go higher. That's what we need on Snowflake. NNE, nano nuclear, just keeps being crazy and it's probably going back to the bottom at some point. WFC, reporting earnings today, beating on the top, beating on the bottom, getting slammed down back to the roadmap line. Beautiful potential. That high, that low. If we can break back above this consolidation here, looking for 63, 64, 66 on the upside there. PALL, Palladium, physical Palladium shares, ETF, still set for lower high, lower high, lower high, lower high. Watch out for the flush. 75 down there. AGQ. So this ultra silver telling a different story than the actual silver chart. I would be very cautious here. Is the ultra telling us the story, or is this just a consolidation before we break out and go higher? We need to move up through this 50 area to take us substantially higher on silver, potentially going up to 86 if we can do it. But this may need a revisit of the roadmap line one more time before we can. GDXU, 3X gold miners. Yeah, that looks like we're about to break out and run. That fired off the pattern to go up to 50, 52, 58. Nugget. That one fired off to go on cruising higher. Also, that would have been this high, this low. Potentially 49, 50, 54. CYN. Grinding down. Reverse split. Oh my gosh, that's even a bigger dumpster fire than anything we've seen so far. And that reverse here. Gosh, that's a dumpster fire. Wow. Are there opportunities on things that are dumpster fires? Yeah, you just saw that one right there. Could have bought there, could have sold there, and then it still goes down. So that's the same thing in the market. If we ever get a big down in the market, we can catch little opportunities, but while the market burns itself down. So that's the beauty of a pattern like this. UGL, ugly, ultra gold. If we can get above, we we're gonna have to break above that. That's like a double top situation. Got to get above that, and the incremental is not that much higher. Really wanted to see this one hit the bottom, but this is leveraged, so it may not be telling the story. 1 minute entry on QQQ. That thing's pumping out trades. And AEM at the targets. Be careful. This can result in a large retrace. Did not hit the daily roadmap line. But it's sitting there. Resistance at 76. Possibly 81, possibly 83. And there you go. That's kind of the list for this morning. As far as things that were moving pre-market. Now, obviously, they're not as moving once we actually got into the open. So this has been a very active day. Looking at NQ, we're getting a rally coming back in here pretty strong. Looking at the lower time frames, we're gonna have to break it back above this to take it back. I mean, that was a big wicked flush, and I've been warning about stuff like Nvidia needing a flush and Tesla needing a flush. So was that enough flush to take Tesla higher again? Quite possibly. Kind of touch the 30-minute roadmap line right there. If you want to do a smaller time frame trade, look for a move back above 256, and we could probably take it on up to 276, 280, 293 possibly. I still think it may rally up to 300 before we get to earnings. Back over all the way over here on the 23rd. I still think there's some juice left in the squeeze right there, even though it was kind of down. I may pick up a small bit of TSLL in shares, not in options. Be careful playing with leverage and options. That's like leverage on leverage. Super dangerous. You're talking about losing value fast. So be careful there. Some Meta dropping. Saw Google dropping. Saw Microsoft dropping. And Apple held up really well. So that's interesting to me that most of the Mag 7 got whacked, but look at Netflix. That one took a spill. Rejected right out of that resistance. That was 40 points down off the high. I'm not sure that's done yet. Speaking of Netflix, there's a sell on that one. On the 1 minute, right to the target. Anyway, bias for the day. Here's the numbers to watch. Here's the numbers to watch. Pop back up and zoom her up, Buttercup. So as I've talked about for a few days now, the bottom of this consolidation we did just 2 weeks ago, 54.50. If we break below that, probably going on down. Back to 5,000, if not breaking lower. If we break back above the top of this bearish engulfing yesterday, probably going cruising on up higher. 58, 59, 6,000. That's kind of the target zone right up in here. 58.50 is kind of the ideal spot to stop. But crazy keeps getting crazier. And we may cruise right on up into the 6,000, maybe even add a little cherry on top. Maybe it'd be kind of a irony if it was like 59.99 and we held 59.99 for years before we ever made a higher high again. Could be like 20 or 30 years before we beat that high if we turn down viciously. So watch out. We're probably going to make a top somewhere in here. It's probably going to last a while. Enjoy your Friday. Make sure you give me a like if anything I said was helpful, beneficial, something different, never heard before. And we'll see you again. Oh, I have something at 2 p.m. If you want to come, it's a special emergency brief. Let's see if I can even find the details about it. I probably forgot to put it in here. Yeah, here we go. I got something new I want to share you about. Like I was kind of teasing it with the 1 minute candles there. If you want to come see me right here, you can come hang out with me this afternoon and find out about it. I think it was noon. Noon. Yeah, noon. Noon Eastern. So it's almost 10 o'clock now. So 2 hours from now, come hang out if you want to see some new information that I got. I don't even know what time I'm doing anything anymore. Yeah, 12 o'clock Eastern. Noon. So 2 hours from now. Right there. If you want to come hang out and see the next thing I'm working on. I've always got something. I've always got stuff. I've got a whole list of like 12 things to work on. Anyway, have a great day, everybody. I'll see you later.